Hello again, thanks for joining me. This week I thought we'd look at when price may be about to change trend and how you can identify it. Firstly, a textbook example or two. You can see now when price is moving, it generally moves in buying and selling waves of buying and selling. You can see here, this is representing one buying wave. There may be some small down bars along the way, but they're insignificant and the trend is higher overall in this little short-term example here. And when price makes significant ground at any time, it'll generally draw out some supply, some selling pressure, some profit takers. And this next little downtrend here is representing the period of consolidation, where after prices gain some ground, it goes through a short consolidation period where the buyers generally are absorbing the supply from the sellers. And as a rule of thumb, if from here to here is the amount of ground made by the buyers in any one movement, in any one wave, the 50% level is the level where if the consolidation period remains above the 50% level, the buyers are well in control and strong. And the deeper price has to go below the 50% level to consolidate, the more difficult the buyers have found to maintain control. Now, after the period of consolidation, you can see the buyers have carried price higher again in a wave of buying, a buying wave. And then another period of consolidation takes place. Now, you can see the first wave of buying was much longer in length and duration than the second wave. So the trend higher is weakening slightly, but it's not anything serious at the moment. And the period of consolidation remains short and shallow, so there's no real problem. Price then moves higher again in another buying wave, and this wave is shorter again, but at this point the period of consolidation is again quite short and shallow. At this point you can see that each wave higher has shortened slightly, so you would have in the back of your mind that the trend higher may be weakening or getting a little tired, but at this point there's no real danger or problem, and you would stay in position. Now here you can see the next wave higher has failed to make a new high, and the period of consolidation in response was much longer and much deeper, and you can see down here it's still above the previous low. But there's no doubt that this selling wave is much longer in length and duration than all the previous selling waves before. This is your indication that the behaviour of the market may be about to change. The next buying wave. The buying wave has good length and good duration. It lasts a long time, but it failed to make a new high. There's a little tiny upthrust above the previous two highs, and once again you'd have to consider that the market, the selling pressure that came in on this down wave, the market may be about to change behaviour, change trend. The next down wave comes in, it's longer again than the previous down wave. It breaks below the low of the previous down wave, and in response the next buying wave could not regain the lost ground. At this point here the market's about to turn, and it's almost guaranteed at that point. It's very, very highly probable the market will turn at this point. You've had a change in behaviour here where the selling wave has increased and the buying wave has not been able to make a significant new high, and then price has broken below the previous low and failed to regain ground. At this point You could go short here, put your stop up here, and be pretty confident the market will head down. Now let's look at a real world example. This was an intraday chart, if I remember rightly. And first of all, you can just see here that we've got a quote from Richard Wyckoff, who in 1932 said, "When the waves of buying shorten in both length and duration," and remember at this point that duration, or the amount of time a wave takes to complete, is also almost equal to volume. So you could say in both length and volume, and the waves of selling increase both in length and duration, the market may be poised to change direction or trend. So let's look here again. We've got a buying wave here. It's long and strong, and in response, the consolidation period, or the selling wave in response, is quite short and shallow. The next buying wave is fairly long again, a little shorter than the previous one, but no issue. And the selling wave in response is short and sharp. The next buying wave has made a new high again, but you can see that the waves higher are shortening each time, and the corresponding down wave is much shorter, and prices failed to make a new high. And then in response, the selling wave has gotten longer. This is the longest selling wave out of all the selling waves previously. You'd have to be wondering here if this is going to be a change in behaviour and trend may be about to change. The next buying wave did not make a new high. It didn't even challenge the previous highs. And you can see when the selling wave has come in, the next buying wave has been weak. There's almost no buyers left in the market here. At this point, as soon as the market turned down, you could go short here and put your stop above this. Or you can wait and feel more comfortable that when price has broken below the previous low and you've got another weak up wave in response, you could go short at this point, or you at least want to be selling your longs, put a stop above this level here and wait for the sellers to take control. Okay, now some real world examples. They were both textbook examples. This is SMN. You can see it's been in a pretty good uptrend for a period. And just note here, this beautiful little period of absorption. If you can get this into your head and understand what's going on, you'll benefit from it. This is a period of absorption. You can see it's characterized by a pressing nature to the upside. All the lows are just slightly higher. You can see all these threatening down bars that make it appear that the market's about to break down, to keep the buyers on their toes, wondering if they're doing the right thing to buy in the market. And every time in response, price goes up each time. There's no downside follow through whatsoever on any of these down bars, even though they threatened the market at the time. And you'll also get clustering of closes, little clusters of closes all together, where price is being absorbed. You can see all these little clusters of closes, they all go together. They're the three characteristics that you look for in absorption, especially bullish absorption. Now this is a real world example. This is what actually happened. And you can see you've got a buying wave, a selling wave, a buying wave that's increased. Now at this point you've got a long selling wave. You would have been a little concerned. In the real world, things aren't always perfect. You can see price hasn't broken below the previous low, so that's some comfort. But in response, price has moved above the previous high. So you wouldn't be selling at this point, but you would have been a little concerned. You have a down wave, an up buying wave, down wave, buying wave. Now you can see that price is really struggling to make new highs here. And if you're looking at the bars themselves, this bar on this volume with the next bars, 3 bars down in response, that would have been a real concern to you. Now, if you mark the low of the range, when you saw this down wave break below the lows of the range and then fail to recover the lost ground when price attempted to recover, when the buying wave came in, this was very highly probable it was a breakdown, a price breakdown. You can see price had struggled to make a new high here. All the buying waves were failing to make any serious new high. You had a big selling bar here. We'll just clear off this and start again. And if you look at the individual up bars, they'll always be on really low volume. You can see that one's very low volume. The buyers in the market are really struggling to take control again. And look at this up bar. The volume is very, very low. The sellers have taken control. You can see that prices on this selling wave has broken below all the previous highs, failed to recover the lost ground. You could go short here, or you'd want to be lightening up on your longs. You should have been doing that after this bar most likely. You can see price broke down again below the previous low, failed to recover the lost ground again. This was a good example of what to look for. Trend was about to change. This is PLS. You can see from these lows a good buying wave, a shallow selling wave, another good buying wave, a shallow selling wave, buying wave, shallow selling wave, buying wave, shallow selling wave. Now this buying wave here has a nasty looking bar here on an increase of volume. Yep, it's that one. That would have made you a little uncomfortable at the time. The selling wave in response wasn't too bad, but the next buying wave really struggled to get above where that bar closed. The selling wave has increased over the previous length and duration of the selling wave. And then price accelerated higher. And when you get bars that are really wide like this, compared to all the other bars, they're very wide, and then you get this on top, it's supply. It's likely to be supply. You should be worried about that. The selling wave in response was only moderate. Price failed to really make a new high again. You would be getting really worried here, or you should be. The selling wave in response is the longest selling wave we've had from all the previous selling waves, and the buying wave in response was weak and shallow. This is where markets changed behaviour, or it's suspected that market has changed behaviour, and you should be concerned. You can see in response price breaks down below the previous low, and it's been unable to get back above it. This is a good example of a trend change. And now a larger cap stock. It's not so much a trading stock, it's a larger cap stock. There are bigger players involved, but there's many of them, and many of them can be doing different things at different times. First of all, a little example of just watching the market. You can see price has been moving higher here. There's little waves, it's trending higher. And then you saw this, you would have been very concerned at the time that this was a half-year result, and in response to the half-year result, this is what happened. Now, I'm guessing, without knowing exactly, that this was a buy the offer situation where someone was wanting to build a position because a few days later there was a new substantial shareholder announcement. So there was considerable effort put in to bringing the stock a little lower, and then after the announcement of the half year, the offer was bought very quickly over 2 days, the whole thing, and then you had a period of consolidation where anyone who was still wanting to sell after feeling a little uncomfortable with what had happened, the buyers were probably happy to absorb that. If we move a little further forward, 3 or 4 months forward in time, there you can see price has continued higher, with buying waves generally longer than selling waves. This was a little bit of an issue. I'm thinking it's lining up with that one. And you had a little high put in here, which is this bar here, which was not too much of an issue, except that the next 3 days with these 3 bars here, and in response the market puts a down wave or a selling wave in. That's easily the longest selling wave that we've seen for months and months. The responding up wave or buying wave was weak. The next down wave didn't break the lows, and there was a stronger buying wave in response, but it was no match for the previous high. You had another selling wave, and the buying waves continued to not be strong. You can see prices attempted to recover the lost ground above the previous high. It wasn't able to do so. It breaks below the previous lows and has a third try. You can see in the real world things are a little different than the textbook examples. The price had a third try to recover the lost ground above this high here, and it's failed again, and finally price is broken below the previous low, and it wasn't able to recover from there, and the sellers were in control, at least for this period of time. Okay, hopefully that you now have some more understanding of what to look for. The first things you're looking for is a shortening of the thrust higher. Each buying wave is getting a little shorter than the previous buying waves, and this is an example of how the market may be showing that it's getting a little weak or a little tired. The trend is getting a little tired. The first selling wave that is increased in both length and duration is your first key sign a change in behaviour might be taking place in the market. Then when the market can't recover the previous highs, you have to really worry that the sellers are taking control. And then when the buying waves begin to shorten so much, they're just showing you how weak they are. There's almost no buyers left in the market. Demand has gone. You can see all these up waves, these buying waves, are so weak compared to these on this side. When price was moving higher, they were so much stronger. The buyers have gone. They've been absorbed by the sellers. No more demand in the market, and price is positioned to start to fail. Okay, that's my lot for the day. Thanks for joining me again. See ya.